What's up, Denver? Chris Lopez here, and I have a podcast today where I sit down and interview Nick Elder. Now, Nick has a really cool story where he started out like a lot of investors buying a couple house hacks. And as he got more into real estate investing, he wanted to start doing a career change as well. Started going down the multifamily route to get the syndications. Fast forward, he is now an investor relations rep at Ironton Capital. And so it's a really cool story about how through just years of working, networking, and adapting to his strategy, Nick has made some successful investments. He's pivoted his professional career and also has pivoted in his investing career as well. So a really cool interview, and it's going to highlight a lot of different aspects that people can do to achieve success in investing and both professional. Nick, I'm excited to sit down and do this podcast with you, man.
I'm excited to be here. Appreciate the invite.
So I forget how you and I exactly met, but it was a number of years ago. And before then, though, you already bought your first house hack. So kind of start us off as to like when that was, where you were in life, and what that young Nick was like.
Yeah, absolutely. So it was about 2019 is when it was. I was 26 years old at the time. I actually moved into a house when I first moved into Denver from Parker, and my roommate at the time was house hacking himself. Which is really cool because I think if
you were paying rent to him.
I was paying rent to him.
Perfect.
And I was like, oh, this is cool. Like, this makes sense. And everything.
Is that how you learned about the concept?
Yeah. And so, him and I would go skiing on the weekends. We'd listen to Bigger Pockets podcasts, and then kind of that hunger for real estate investing and building wealth just started. That's where it really started. And then I lived with him for about a year, took money actually out of my IRA because of a tax loophole there, which allowed me to, and bought my first house hack.
Talk about that for a second. What was this? I think you take out what, $10,000 for first, or what is it?
Yeah. So I'd been steadily rolling money from past employers from a 401k into my traditional IRA, and you can take up to $10,000 penalty free. So you still pay the taxes, but that was in 2018. Obviously the appreciation that's happened, I far surpassed any of that tax payment that I initially paid.
Oh yeah.
In equity. So it's just it was one of the smartest decisions I've made from a financial standpoint.
Great. Yeah. And so then you saw the power of house hacking, got sucked into the Bigger Pockets world like many of us did. And then what about the first house hack you bought?
Yeah. So the first house hack, it was up in North Denver, 3-bed, 2-bath townhome, has an HOA. But it hit for me when I first moved in there. Before I even had my mortgage payment, I got 2 tenants secured before I even moved in there. Started getting about $1,900 in rent, just like that. My mortgage and my monthly cost just evaporated.
You were sort of living for free?
Yeah. I mean, I was paying, $1,000 or close to $1,500 in rent, a month prior. Moved into my first house hack. At the same time, I changed jobs and was able to increase my income about 50%. So from that standpoint, I completely eliminated my cost of living from a rent standpoint, increased my income. It was just off to the races as far as like saving money for that next one.
And so I mentioned in the beginning that, you've now changed your career to work in real estate, but back then you were not in real estate and you were in pharmaceutical sales, right?
Yeah. So I was kind of, I was in the healthcare industry. I got back into pharmaceutical sales. I really kind of, the theme of my career up until this point, even including this point, had been learning something new at every new company that I pretty much went to. So yeah, I was in healthcare sales and account management. I was in pharmaceutical sales. And it just, at the time it was great because the income supported my ability to house hack. But since then, my goals have, drastically changed.
And talk about that, because I know at some point, but I know after you bought House Hack 1 that some meetup or some event, some networking, which is always a great thing to do. You and I got connected and just stayed in touch over the years. And so I don't remember, I don't have an exact timeline about everything you've done in your career. Talk to us about the timeline for House Hack number 2. And then also when you got like the bug to not only invest, but shift career paths.
Yeah. So the bug to invest definitely started in my first house hack. And then I was there for about a year and a half, started looking for other houses, and then closed on a second one, September 2021. It was a new build. So I had locked it in a year prior and then closed on it a year later when the interest rates were super low still. So 2.8 on both houses.
Nice.
And walked in with like another $80K in equity on top of what I put down because of the market.
So it's like just a new build infill townhome?
Yeah, so it's actually in a developing part a little bit south of Sloan's Lake. Westline Village is what it's called.
Okay.
And there's a ton of new construction happening there. It's on the south side of Colfax. So it's a growing area right along the train station there. It's a great place to be.
Yeah.
Yeah.
So you moved out your first house hack, converted that to a rental property.
Correct.
Got the second house hack south of Sloan's Lake, and were you doing the same roommate rental strategy?
I was, yeah. So I was renting it so I shifted my previous house hack to a rental. So that's a rent by the room rental. Great cash flow, but it's much harder to manage. And then I did the same thing in my second one. But at the time, my girlfriend moved in with me. We had a roommate that was in there. He ended up leaving. And my goals, just from an investing standpoint, kind of changed after that happened and what I was looking for in my future of investing. And so he ended up moving out. So we're not house hacking that property anymore. But ultimately, we'll probably end up going to buy another house, doing more of the nomad strategy.
Yep.
And turning this current one, this current one's a perfect rent by the room rental. So
that location is phenomenal.
It's phenomenal. And, they're building some of these houses at a point where it almost seems like they're purposely, making them to be rented in that way. It's a 3-4. It's a beautiful house. So I'm sure at some point I'll pivot, use that as a rental, and then do exactly what I'm doing with my first one that I'm probably about to sell come next year.
All right. So that was 2021, bought the second house hack.
Mm-hmm.
And when did you start thinking, hey, I want to shift my career away from healthcare into real estate?
Yeah. So I was still in pharmaceutical sales when I knew that, okay, I wanted to get into real estate. I started to really open up my eyes more to the private equity side, to the syndication model, and more specifically, investing in multifamily properties. There's so much more control over the valuation of those properties, as you and I both know, and Lon as well. That's why he started this whole thing, because there is that much control and it's a great product. So I really started to kind of just network with as many people as possible. I tried to find mentors, and I tried to build my network of brokers and investors. And quite honestly, I just went into the whole process with an open mind and tried to learn and connect with as many people as possible.
Were you going in there with like, hey, I want to go in there and put a deal together myself?
Mm-hmm.
That was like, because I imagine that's usually the end goal for many people. Say, when actually, hey, you can, raise a couple $1 million, find a deal, put it together. That's kind of like, a huge milestone.
Mm-hmm.
Was that your main goal, or were you just looking to like get in that industry?
Yeah, that was definitely my main goal. One thing I quickly realized is, quite frankly, I was very green. I was very inexperienced, and I love I had the right vision, the goal. It's just, I didn't have that mentorship there for me. I was very inexperienced going into it. And then coincidentally, the market really shifted and things changed. And I was like, okay, I've got a network of, professionals that I could probably pull some money with, but the market is shifting quite a bit. I mean,
you're talking about with the interest rates going up?
Yeah. And there's a lot of syndicators, I think, that got into it a couple of years ago, and they rode that wave, and,
some are getting spanked right now.
Yeah. They think they're, like a blessing from God in what they're doing. But now the market's shifted, and I was like, okay, I'm inexperienced in this whole avenue of investing to operate myself. But then the market's shifted. I don't really know how to play in this sandbox from an adult standpoint. Like, my entire career, since I graduated college, has been in this hyper growth in an economy. Yeah. So I don't know how to operate in these, down real estate cycles.
Well, plus the other thing is like, one of the, hey, you get your loan for a house hack property. Hey, if you meet the requirements, your DTI is good, here's a loan. Mm-hmm. They don't really care if it's first property or fifth property. Right. You go into commercial lending, like, oh, what's your track record? And if you've never done a commercial property before, you get underwritten differently, which is usually you're a higher risk, mm-hmm. so a higher down payment, and usually less favorable terms than an experienced operator. And so that's like a double whammy, because you're already dealing with a higher interest rate market, and now you have to bring more money to the table, which just complicates things and, pushes returns down.
Yeah, absolutely. And you need a sponsor that matches the net worth and has the liquidity in case something happens, and needs at least 2 years of experience doing exactly what you want to be doing. So you need to find somebody that's going to essentially sign off and guarantee that loan for you, or partner with you on that, and that was something that we didn't have. Yeah. Something that we kind of started to quickly learn ourselves.
And so you had a partner in here?
So yeah, it was me and a friend and his wife. So we had started it. And, love work with, they're big investors themselves. They own a single family rental portfolio. We'll probably joint venture and buy some properties ourselves at some point. All three of us can do so.
Yeah.
So that's what we're thinking, probably in the near future or long-term future, I would say.
Okay.
Yeah.
And then, is this the point during your story and your career phase where you started working on your real estate license? Mm-hmm. And we're starting to talk with some multifamily brokerage shops?
Yeah. So I ended up getting laid off from my pharmaceutical sales job in August 31st, the day before. Found out that, I had a nice call scheduled on my calendar, and I knew exactly what it was, having been in the industry. But I was like, this is a great time. I'm either going to pivot and go full time into real estate, or I'm going to recede and just go back into the cushy, high paying pharmaceutical sales job. So it's definitely one of those, pivotal moments for me. And, a broker that I know well at Kaufman Hagen, one of the things he said to me was, there's no such thing as stagnation. You're either moving forward or you're moving backward. And that really put things into perspective for me. Because at that point I was like, yeah, going backward would be going back into pharmaceutical sales. Going forward would be going into real estate. And so I quickly got my license. I had the time to do so. I was thinking I was going to go become a commercial broker because I really wanted to get into the multifamily side of things. Learn as much as I could there and do it from a brokerage standpoint. But ultimately that led me to, us connecting and this opportunity with Ironton Capital coming up. And, my whole entire vision future of real estate kind of shifted a little bit.
So you got laid off August 31. And after that, that's when you started working on your real estate license?
Yeah. Okay. Yeah. I was kind of interviewing at some other pharmaceutical companies, and I was like, man, this is just, this is not what I want to do.
You weren't excited about it?
I wasn't excited. I was like, I kind of knew what the long-term career trajectory looked for that, industry, and it just was not something that I could align with. Real estate is, I could do this until I'm, 90 years old, and that's kind of what it came down for me is, what is the long-term vision for this? It's real estate. So I was just kind of all in, in those 2 months where I had my severance and after getting laid off, and I was all in. So my mind really committed to real estate.
Now, two things that stuck out to me, because obviously, we stayed in touch and now we're working together, was that you had done a good job of putting money aside to just save for a rainy day and also save for transition. Mm-hmm. Like a lot of stuff in real estate is not hard. It just takes a couple of years to start making money after building a business or starting investing. Yeah. And that's a lot of people just run out financial remedies. So good reminder there, and a great thing that you did. Secondly is that you kept networking. Mm-hmm. And I can't remember whatever it came out to be. I guess it must have been after August 31. So maybe in September, October. But I just remember for some reason, we sent back and forth a few emails. I don't know what prompted. Maybe you would reach out to me saying you're updating, or how we even get connected on your career change.
I knew you were involved with Kaufman Hagen in some component, in some aspect at that time. And I think I just reached out to you. I can't remember the specifics, but you invited me into the Kaufman Hagen office. That's where I met Kevin. And I just really started to kind of build a relationship with him and build a friendship with him. But that's when guy. And so that's when you and I really started. That's when you and I connected, and I think you got a flavor for what I'm looking to do long term. But I know we had originally connected from the first portfolio analysis mastermind.
Yeah, that's right.
Yeah, so that's when we originally connected. But I think at the time it was, I was this house hacker. I don't think you knew what my vision was in real estate and what I wanted to do and where I was looking to be until that.
Well, there's also no Ironton Capital back then either.
That's exactly it, right?
So there's a couple other pieces of that puzzle.
Yeah, I know.
But I want to highlight here because, something a lot of people don't do is that they don't build that financial runway.
Yeah.
So you did that. Great job. Other people out there, hey, if you do transition, make sure you have a lot of money socked away, and probably more than you think to. Secondly, keep networking and let people know what you're doing.
Yeah.
Because that is such an important thing of hey, I'm doing this, I need this, I do this. And whenever we got connected, I remember, hey, cool, what's your hey, what's your plan or what's this? And you sent over something, and we would just kind of bounce back and forth some ideas with really no intention that, hey, I got some ideas, let's kind of share ideas and see where it goes. And I think it was November time, early October or November time frame?
When?
Where we started talking about Ironton Capital.
Oh, that was I remember it was November because I
Right.
started at Ironton Capital on the last day of my severance.
Okay.
So it ended up working out perfectly. It was like the week before then, before Thanksgiving.
Okay.
Yeah. So
to kind of fill in some of their stories here, and again, this is why I'm trying to connect some bigger dots here to help people realize, hey, networking, you do this,
Yeah.
and just, hey, if you do that, eventually certain stars line up and you get some green lights. And that's what happened with us, where, Ironton Capital, which is the private equity fund that Lon Welsh started basically June or July of last year. We were, month 4 or 5 into it, and realized, hey, business here, it's going well. We were cranking. I think we were close to like 15, 20 million raised by that standpoint. We're like, wow, we need another IR rep, another investor relations rep. And I'm always a big believer in, like, I like to work with people I know, like, and trust.
Yeah.
And already kind of know who they are, they like or don't like me. And so all I did is, all right, let me just pull out my phone, and I just started scrolling through people's names. And I was like, oh shit, Nick Elder. I need to call Nick. And I think it was a Friday night. I text you, and I may have had a few drinks in me, and I was like, hey, Nick, I got an idea for it. I think we talked at 9 a.m. the next morning.
Yep.
And it's one of the things where it's just like, I was like, hey, you'd see what's going with Ironton Capital, gave the rundown, here's a growth phase, and I knew that's where you wanted to go long term. It just like the stars aligned.
Yeah, stars aligned perfectly. One of the things I was definitely missing was the right mentorship previously. And I knew of Lon just from your castle, and then you guys started actually putting out content with Ironton Capital, and so I started following along there. I was like, oh, these guys are doing some really amazing things. I was just thinking in the back of my head, I didn't think I was going to be landing at Ironton Capital, at that time, but the stars aligned perfectly. And I actually came home. I was out to dinner with my girlfriend, and I just left my phone at home, and I came back and I was like, oh, Chris Lopez, and I was like, I saw your text message about this opportunity with Ironton Capital. And I was like, I even said to my girlfriend, I was like, I think this is one of those full circle moments I got to pay a lot of attention to. And yeah, we had a conversation the next day at like 9 a.m. I think it was a Saturday.
Yep. No, it was a Saturday. I remember that.
Yeah. Stars aligned. I mean, I wanted the mentorship. I wanted to learn from the best of the best in Colorado from a real estate standpoint, just from building a business too. And the stars aligned perfectly. So it was like one of those things where my vision and my goals completely shifted from, I'm going to go be a commercial broker somewhere along the line. I'll probably maybe syndicate my own deals at some point, to this is a great opportunity. Here's an opportunity to get in with a group that is crushing it, an opportunity to get in with a group that has great brand exposure and awareness in the market in Colorado, and a great opportunity to learn from people that, learn from folks that like don't have those same opportunities. And so I kind of just felt like it was like just one of those full circle moments from when we initially met to at that moment where I saw that text. It was just one of those full circle moments where the stars aligned. And I'm like a little spiritual weirdo sometimes when it comes to those things. And
what do you mean?
I think things happen for a reason, quite frankly. I think I was forced, I think if I did not get laid off from my job, it would have been a lot harder to willingly leave a 6-figure paying job to go full time in real estate. Of course. Yeah. If I wasn't forced into that situation, I wouldn't have been forced, I think, to think differently and to think, where do I want to be in 5 to 10 years or 15, 20, 30 years? So that whole, I completely turned a negative into a positive and really started to see things from a different light. And,
well, I would say one thing, I mean, you have a winner's mindset, is you look for the silver lining.
Yeah.
There's in pretty much everything out there, there's a silver lining. And now the silver lining is, hey, I'm going to use this opportunity to go out there and do a pivot. Mm-hmm. It'll be a lot of short-term pain and frustration, but it's the right step for the long-term growth plan that you want to go into. Mm-hmm. So, I want to really highlight, a couple key factors here. Again, you're networking, you're sharing what your goals were, what your plans were, but you weren't afraid to pivot.
Yeah.
And what I've seen some people do, and this is like, I don't want to say it's good or bad, because I go back and forth on here. It's like, oh, well, hey, I'm getting my real estate license, and I think the following Thursday you're going to sit to take your exam. Mm-hmm. And I was basically like, dude, that's a waste of time.
Yeah.
Probably still apply that. Hey, take it if you want to, but Ironton, we don't need in this much better path on here, but obviously take it because you got to work in there. But some people get so like fixated. No, I have this plan. I've got to stick to it, which is good for that commitment. Mm-hmm. But if a mentor appears, an opportunity appears, it is okay to pivot. It's okay to say, I was doing this, I committed to this, but you know what? now this is a better opportunity over here that fits way better opportunity. And honestly, this like fast tracks me 5 years faster. I want to go. Why would I do it? That's not a bad thing. You're saying no to here. It's just like, you know what? This great thing opened up. I'm pivoting. And I see a lot of people have made that mistake in their career and their investing. It's so fixated. It's like, cool, you have tunnel vision, but you're missing out that if you just would go through the door on the left, you're going to be way better off.
Yeah, absolutely. It's definitely okay. You know, the one thing that actually helped me out a lot that I think could have changed things is, you know, you mentioned previously having that financial runway, which I was able to build through house hacking and saving up as much money as possible. There's a lot of people now that are unfortunately getting laid off, and they've got maybe a ton of money in a 401k or a ton of money in an IRA that they cannot access. And now they're scrambling to find a job that maybe they don't want.
Yeah.
So they're afraid to make that jump that they've always wanted to make. So I built that financial runway, which allowed me to make that jump. You know, I was originally going to go into commercial brokerage and be like, I'm going to put up a goose egg this year and I got to be okay with it.
12 months before you make any money.
Yeah, I got to be okay with it. You know, that's just the reality. But I was kind of using that as a stepping stone to the end goal, which is raise capital, syndicate investments, raise capital with a team, manage relationships, work on relationships with investors, and just really build, like my holistic approach in real estate that way. So I was kind of using that commercial side of things as a stepping stone, but I, cut right out of that and went directly to the end goal, which is exactly where I want to be now. And the one thing that made it so easy too, is I kind of finally got clear with myself of like, if I go back into what I was doing before, it's a financial decision, and I've made financial decisions that didn't turn out to be the best from a career standpoint.
Yeah.
But I'm going into something that like is very much in sync with who I am as a person and where I want to be long term. And when I just kind of really got true with myself, as far as you could take path A and, go backwards, but still make the same money and,
which is getting another job.
Yeah. Which is getting another pharma job, and then maybe perhaps getting laid off in 2 years again. And now I'm finding another pharma job, and hey, that opportunity with Ironton is now sailed because I didn't take advantage of it. Or path B, which, I don't even want to say it's necessarily like in any way whatsoever a step back. It's 100% a step forward. And, from a professional, personal career standpoint, it was like such an obvious move for me and what I was looking for. So I just got really crystal clear on what my goals were and where I wanted to be, even 10, 15 years from now. And I was like, this is a decision I have to make right now to get there.
Yeah.
And so it was an easy decision when I really got crystal clear with what I was looking for.
Great. Well, I'm glad it worked out. Glad you're on the team because we are doing a great job together. I want to shift a little bit. I got a lot of questions around here, but I want to shift towards investing as well, because I know through a lot of this, your investing has changed. Mm-hmm. And then, I think it's basically, within a week or two of us, whenever we kind of got started and, got the ball rolling, back then we were doing raising money for an apartment syndication, Samuel Drive.
Yeah.
And you're like, hey, I want to invest in this now too.
Yeah.
Which was awesome. But also like a very pleasant surprise. What prompted you to want to invest passively and move away from doing more traditional active and house hacking rental?
Yeah, absolutely. So investing passively, and the one thing that really attracted me to Samuel Drive was, I've been following Terrence for a long time and Verico and everything that they do.
That's one of their projects.
Yeah, and that was a big thing for me. I was like, this is an opportunity to invest in one of his projects. I used to live up there, so I can drive up and see it, and that's a really cool thing for me, And I'm talking with investors all day long. They like seeing the asset that they invested in and driving to it. And so shifting to a passive investor gives people the opportunity to leverage the expertise of the people that are operating those buildings or operating those funds without doing any of the due diligence work. The only due diligence that I have to do is, who am I investing with? Can I trust this person?
Mm-hmm.
At the end of the day, I don't have to go underwrite the deal per se. I don't have to go manage the construction process. I can just hand my money over, know that I'm investing with the right people, and leverage their track record with my investment. So I pivoted from house hacking or working to buy straight rental properties to that for that exact reason. And quite frankly, the returns that we're seeing nowadays, you either have to house hack or I think do a passive investment, or you can flip a house or what have you.
Yeah, it's really, it's a weird time in the market where it should not work this way, but you take less risk, do less work. And a lot of times we're seeing, comparable or even higher returns on the passive side than, buying a traditional rental property.
Yeah.
Which, hey, hit the easy button, make more money. not a bad thing to do by any means. But I think another reason you're able to invest in Samuel Drive is because you'd also built up a very, very healthy financial runway.
Yeah.
You're like, hey, you know what? I got this next career path, got this figured out. Hey, I can take part of what I have set aside and put a few bucks in here to start investing, which, hey, the sooner you invest $1, the better off you are.
Yeah, I was very strategic. I knew that I had, and the other thing that helped me out too is I got a HELOC on my primary residence right before kind of everything changed, which is great. I was able to get like a $50,000 line there for emergency expenses. And so I was like, well, I've got this money if I need it in a situation, right? But I knew that if I invest in Samuel Drive, I could see this money in like maybe 2.5, 3 years, and it's going to come back to me, in returns. And so, yeah, I was able to do it. I'm blessed that I was able to do it, even having, lost my job. I knew that I could probably carry myself just through Ironton Capital and through some other things until that Samuel Drive opportunity maybe pays out. And I wanted to get started as soon as possible. It's a great time to buy, truthfully. Yep. I have that conversations with investors all the time, especially now. It's like a great time to buy. Definitely on the commercial side from a multifamily standpoint, and probably also the case from a single family side. And so
I got a couple more questions here for Nick, but I know one of your strategies, I think, for next year is you're planning on selling house hack number 1.
Yeah.
Give us a high level of that and what your plan is there, because many people buy house hack, never want to sell it, but you're selling one you bought 4 or 5 years ago.
Yeah. So I lived in that house hack for 2 years. And just by that 2 out of 5 year rule, if I sell next year, I can avoid those capital gains. And so that's huge. And I think for anybody that's on here listening that is house hacking right now, definitely something to consider. If you're maybe a year in your house hack or you're in your second year and you've got the means to buy another one, like I think it's a great thing to choose to do. I lived in there for 2 years. I'm going on my 5th year next year of selling it. I'm going to roll all of that into Ironton Capital, and it's something that's going to pay me, maybe 17, 20% on that money. Yeah. And so I'm super excited for that. Again, leveraging that passive investment and the expertise behind the people who are managing the funds or managing the projects. It's a great tax loophole for people investing in real estate, especially for people house hacking. If they're on a 5-year exit plan or whatever their strategy is, make sure you live in it for 2 years, move on, go to the next one. And then you could make considerable money, just through equity appreciation.
Well, especially you bought that in 2019. I mean, that was, we had a very good appreciation party for the next 2 years or 3 years after that.
Yeah.
The party's over now, but probably made quite a bit of equity on there.
Definitely quite a bit of equity. Yeah. I mean, I'll probably walk away with, I've got my license. So, I mean, I'd like to potentially sell it myself. And of course, avoiding $40,000 in capital gains tax. I mean, I'm eliminating like $60,000 just from all of that, right?
Yeah.
And so I'll probably walk away with like close to 180.
Wow.
At that point, and I'll probably piece it out through many different national diversified funds. So
you'll roll it out in some of the national diversified funds in Ironton.
Yeah.
50.
Oh yeah, absolutely. Yeah. I'll probably put some in the short-term income fund until I'm ready to deploy another 50. Or what have you. But I feel like I've got a really good idea on what my strategy is with that equity, but I'm excited to kind of get out of it from an active standpoint, because managing the rental, especially by the room by myself, it's taken up that headspace that I don't want it to take up. I want to have a singular focus of raising capital at Ironton Capital and just letting my investments be on autopilot at Ironton Capital as well. So I'm really excited for this strategy shift that I've had. I'm looking forward to, especially like in years 3, 4, and 5, when some of those start to come back to you. It's going to be exciting.
Yeah. So what does your girlfriend, I should say, think about the big career change here? Because, there's, for many people, we have partners, spouses, significant others that, we got to take care of and be respectful of. Sometimes you're entrepreneurial, sometimes you're not. Sometimes like, what the hell are you doing? What was her perspective on this? And any kind of just tips in general for helping other people navigate big changes like this?
She's been incredibly supportive, very supportive. She knows my passions in real estate. She knows this is what I want to do long term. She knows I love investing. So she's been very supportive. And again, having that financial runway allows us to like not feel stressed, quite frankly, about where we're at financially. We're in a good place financially, even with all that, being in consideration. So she's been very supportive. I'm very thankful for her. I don't think I can ask more from her in that standpoint.
Awesome.
Yeah.
Well, I mean, congratulations. So something else I want to ask you, because a lot of people want to do what you're doing, get into, investor relations role at a private equity firm. What's your just typical like week look like in doing like investor relations, and how does reality match up with what you thought you were going to be doing, whatever, 4 months ago, whenever we started talking?
Yeah. So I guess reality, I really tried to go in with an open mindset. I didn't really know what it entailed. I had a high level understanding of what investor relations does. I mean, you're managing the communications with investors, you're managing those relationships and creating new relationships and just continuing to build upon them so you can have investors coming back multiple times and investing. One thing I didn't think of from a capital raising standpoint, I didn't know what to expect in that regard. I figured it was going to be like dialing the phones a lot, obviously just, cold calling, raising capital, reaching out to people that I already knew who might be good candidates for investing with us. And so I guess from a day-to-day standpoint, working with Zach, that's a lot of what we do. We are just constantly trying to educate investors through our webinars, et cetera, which are huge. We provide so much value to our investors in so many ways. So a lot of it is following up from those webinars, prospecting, reaching out to investors, educating them on our funds, understanding what their investing goals are. And one other thing that I didn't think was going to be part of it that I really love doing is analyzing investors' rental properties and giving them a guided business decision of what to do. And I'll just give you an example. Yesterday, I did a call with an investor. She's looking to sell a rental property. It's in Edgewater. It's a headache from a management standpoint. She owns it outright. There's no mortgage payment on it. And this is something I find a lot with investors too, is they have a paid off property with single digit returns. They haven't increased the rent. They want their wealth to accumulate more, but it's not going to in a property such as that.
Yeah, with no leverage.
There's no leverage. And, quite frankly, people have tenants in there for years and they don't want to raise the rents, and that's what you do on the apartment side of things. That's how you push value. You don't really push value in that same way in single family. You increase your cash flow, but you don't increase the value on the other end. And so I have a lot of conversations with investors in that standpoint, and we lay out scenarios for them. Hey, does it make sense for you to keep the property? Does it make sense for you to get a HELOC and invest it with us? Does it make sense for you to sell today, pay the gains, pay the commissions, and invest it with us? And those are some of the conversations I love having, because it really is, I think, a huge value point for us at Ironton Capital that a lot of firms don't. We take the time to really provide this value to investors and help them make decisions based on their current portfolio, just like through the portfolio analysis.
Yeah, I mean, I mean, you're speaking my language, man.
I know,
That's like the fun, like almost like real estate financial advisory. Hey, like how do you win the game of real estate? Because everyone tells you out there to go buy a property. No one kind of tells you what to do after you own the property for 5 years or 7 years. Or, hey, we saw 42% appreciation the last 2 years. What should I do with this?
Yeah.
What do I do with this monopoly money? So yeah, I love it that you're excited about that, dude, because it's like really good, it's amazing value for people.
Yeah.
And like, it's so much fun to like talk to investors to like help them figure out options with their rental properties. Especially like, it's funny, especially since a lot of people are unaware or they're newer to like someone like the fund investing that Ironton and Lana's doing, as they kind of get those like shifts, just like I had, 10 years ago as I was buying rentals. Like, it's very fun to like see those paradigm shifts for people. And they're like, oh, I get it. I can do this. And like, they get it, which is the education aspect. And then you go out there and actually help them execute it, which is actually doing it to help them meet those meet those returns to get to their goals.
Yeah, absolutely. We work with a lot of investors that have like 10 plus properties, and maybe they're managing it themselves. Even if they have a property manager, they're still managing the property manager. So there's still an active component to it. And maybe they're sitting on like paid off properties. And I had this conversation with another gentleman whose goal was to get to 13 paid off properties. He's more than halfway there. But after our conversation, he's now selling off some of his properties because he wants his wealth to, he literally said to me, I want my wealth to double in 5 years. And I honestly said to him, you're not going to do that with a bunch of paid off proproperties.
Yeah, if you're just paying down debt and paying off properties,
it's great if you're just hanging out, and it's each house is like a pension fund in a way, in some aspect. And But the reality of it is like his rents weren't increasing. They were well below market. And, we're heading into this time period where appreciation's not going to be in double digits.
No.
It might be 2% this year, if not flat. And now if you're not raising rents, you're just, you've got a portfolio that's not growing. And I think we're at this intersection of time in the industry where Ironton has a ton of value for those folks, where they can take single digit return properties and put it into something that's like 17%, and they'll see their wealth accumulate quite a bit.
I got a random question for you, Nick.
Yeah.
So you own, two rentals now. You're doing some passive investing. Is your plan to like always have a mix of both, some passive, some rentals, or you're like, hey, I'm done with rentals and all passive?
Yeah. Honestly, I think it's all passive for me.
Really?
I mean, but I'm also one of those people that I have seen how my life has really pivoted into down multiple different paths in the last 8 years since moving to Colorado. So I'm also like very open-minded to what some of those opportunities are. If I'm investing a couple $100,000 into Ironton Capital and that's going to start coming back to me in like years 5 and 6, or maybe even sooner, I've all of a sudden got many other options available for me. I mean, one thing I think I'm also really drawn to is like private lending, that I'd like to have that component in my portfolio at some point.
Where you're lending directly to people.
Lending directly to people, exactly. I like the idea of having my money come back to me a little bit sooner. But we'll see. There's a lot of due diligence on the front end. That's still active, at the beginning until you're actually collecting that interest income.
Foreclose on
until you got to foreclose.
I've heard some horror stories. Be like, oh, it's all great until this loan in Michigan I have to foreclose on. I was like, well, what do I do?
I know, yeah. So
that's my biggest concern about that. I was like, okay, I like the concept, but when something goes bad, I don't want to deal with it.
Well, at that point, you might be getting like 10 to 12%.
Oh yeah. Oh, the yield is amazing.
The yield's amazing, but it's active. Yeah. So I'm also like, well, I just want to put it in our short-term income fund, do absolutely nothing, not to sound like I'm lazy or anything like that, but I'd rather just put in my short-term income or our short-term income fund, get the 7 to 8%. It's like, I think the effort is worth that extra 4% or the lack thereof, I guess, if you will. So I don't know. I'm definitely keeping things open. I think passive investing is definitely the way forward for me. I mean, Lon's incredibly intelligent.
Oh my gosh. He's one of the smartest I've ever met.
Yeah. And he's super well known. So like, I feel very confident putting my money with Lon and with the partners that we're working with at Ironton Capital. So it's like, can I really take my money and go achieve better returns than what we're getting at Ironton Capital?
I don't think you're going to beat Vital, Lon, and Brent. Those guys are much smarter than I am.
Yeah, exactly. And so I've got total faith in what they're doing and what they're looking at. So I mean, from a passive standpoint, it's not even just because it's like, I don't want to be active or I want to do less work, but it's also just more of like, am I going to be able to get more than maybe 17% a year somewhere else? And I don't really see that being the case unless I'm house hacking, and that kind of that strategy has kind of sailed for me at this point.
Awesome. Well, Nick, this has been great. How can people get a hold of you either to, not just talk about potentially investing in Ironton, but connect with someone that's, an investor, a house hacker, someone that's changing careers? Obviously, I think there's a lot of people I want to connect with you, and you've always come across me as you like to give back and, hey, I learned this, provide mentorship. How can people get a hold of you?
Yeah, so they can either call my cell or they can email me. I mean, I'm fine with them emailing me at like nick@irontoncapital.com. Cool. They can call my cell, which is 412-848-7668. I believe I'll actually be in the 2023 Guide to Colorado Real Estate Investing. So my information will be in there too. Feel free to read my story.
You will be.
I will be, yeah. But yeah, they can find my information in there as well. Cool. So,
and of course, we'll put all that in the show notes as well. Nick, thank you so much, man. Yeah. I'm glad whenever we got connected 2-3 years ago, I'm glad the Universe River took us that way. Very excited about how things pivoted to Ironton last year. Have loved working with you. So thank you.
Thank you.
And hopefully viewers, listeners out there, grab some tidbits from Nick, not just on the investing side, but also pay attention to how he's been able to completely change his career path as well, which will impact a lot of future happiness and future investing as well.
Yeah.
So awesome job, Nick.
Yeah. Thanks for having me. It was awesome being here. Hope to do it again.
Oh, absolutely.
Yeah.
All right, everyone.
All right.
We'll see you next week. Any questions, hit me up or hit Nick up. We'll see you next week.